Oh man, so what a week it has been. I'm Ijaz. Welcome back to another episode in our Crypto Weekly feature, where we take a look at what has just happened in the last 7 days here on crypto. As you guys know, we produce daily videos here, updating you guys on your favorite coins and the wider crypto market as a whole. So if you appreciate that and this weekly summary to digest it, plus to look out into what could happen next week, make sure you're smashing up the like button, make sure you're subscribing. Don't forget to check out NordVPN, links in the description. 70% off of a VPN subscription for 2 years. It works out like $2 or $3 a month to make sure you're staying safe in crypto. Let's get straight into it, guys, because I'm excited for this one. It's been a crazy week. And as we know, guys, let's move me back to where I belong down there. As you can see, it's been a crazy week. You can see this red line here denoting when the week started. And we knew we were heading into a crazy one with the FOMC meeting. We were expecting our first rate hike. But to start the week off, we had to first face a little bit of a challenge. Now, it was a little bit of a challenge because we knew the EU were putting forward a proposal to put some limitations on proof of work blockchain. So, you wake up on a Monday, you've got your coffee there ready, right? You got your coffee, you're ready for a good week. Then the EU got a different plan, right? So that was the first challenge we had to deal with for the week. Let's see what happened there as a flashback. You can see a big down day yesterday. We knew that the EU were voting on a controversial decision to limit certain currencies with a proof of work mechanism. And the idea behind this proposal, which has been quashed, and we've received the update just about an hour and a half ago here in the UK, it's been quashed by the European. And as you can hear, guys, it was quashed, right? We know that it was quashed, and we end up having a lovely rally in Bitcoin on the day, here, intraday. I remember it being up almost 8% at one point, just showing that, look, this was good. And, that ended up being a good start to the week, because remember, this was a critical point. We couldn't have afforded another red candle here. This would have broken us out from this wedge, which we've been tracking ever since we've technically entered it on this big candle here on the 4th of February, right? So if we've broken this down, you're looking at price targets to 32 to 33 on the downside of this wedge. So it's really important we got that bounce. Thankfully, that proposal got rejected for now, and we were able to move on to Tuesday, where I made a risky crypto bet. Let's take a flashback to see what happened. I think the whole market is really in peak FUD right now. It's been smashed. It's taken a hit for a long time. People are not buying right now. If anything, they're selling. And that is why, for me, I'm not financial advice, just something I'm doing. I'm continuing to nibble on my high conviction plays, because the bang for your buck you're getting right now, if you've got conviction and you're willing to take another 10-15% down from this point, absolute no-brainer. For me, the way I like to think about it, there is far more upside to be had here than there is risk to the downside. There you go, guys, and I announced that, and at the time, I started to pick up some Phantom and some of my favorite coins here on the low on these dips, because I knew that this was peak FUD, right? That's ultimately what I was getting at in those videos. It just felt so bad and so difficult as an investor, and that is when you start to get that feeling. That's when we need to train our psychology, not financial advice, of course, to say, hang on a second, maybe this is over-exaggerated. With the Phantom, the whole Andre Crony issue was still weighing on it. TVL was down, the price was down, crypto's down, everybody's feeling bad, stocks are down, Russia, Ukraine, interest rate hike coming in a couple of days. That was peak FUD leading up to March 16th, and I nibbled some more. And then the day following, Wednesday, the Fed announcement. Let's see what happened there. So we had an announcement from the Fed that what we're expecting is the majority of people are expecting 1.9% Fed funds rate by the end of 22. Now, basically, in essence, like how we've been saying, we expect at least 6 to 7 0.25% increases throughout this year. So there's 6 more FOMC meetings. We expect 0.25, 0.25, 0.25, which will put you in that range by the end of it. It might need to be a single double rate hike, and I think the market's going to start to price that in. And there you go, guys. It was a good day. It was a good day. We were worried. The market had priced in a lot of fear leading up to this meeting, right? We've had a tough time. Remember I said, looking back, when we were in this downward wedge and we were looking at this, we knew there was going to be a whole bunch of volatility leading up to this Fed meeting on the 16th of March. In fact, we drew the line, monitored it, and we saw plenty of full starts, liquidating longs and liquidating shorts, and it ended up in this channel. And we knew it was going to be a big meeting, but it couldn't have gone smoother, in my opinion. Got our first interest rate hike, we got what is called liftoff, and more importantly, we have a plan. Investors don't mind good or bad news. They just need to know what's happening. We got a clear roadmap to say, okay, we're moving from an environment which is a fear of interest rates, to now saying, okay, we've got our first rate hike of 0.25. We expect 6 to 7 more 0.25% rate hikes this year, and we're going to move into a more of a tightening monetary policy, monetary stance, right? And the market's taken that in its stride, and we saw that happen, and that's really important. I think this is really going to be a catalyst for us going into this week now and weeks following, that we now know that things have changed, right? We know what to expect. May, we're going to get another 0.25%, right? And therefore, the market likes that. We're not waiting for this next Powell meeting, not knowing what's going to happen now. Pretty much got a clear roadmap. And that then led us in to Thursday, where let's take a look to see what happened on Thursday.
You saw the rally yesterday, you saw the nice big green candle here on Bitcoin yesterday, but now we've met with a small red candle, call it a consolidation here on crypto. And if we look at the wider markets, we're seeing a similar trend as well. You've got the Dow up 0.52, S&P up slightly 0.5, and the Nasdaq trying to hold itself green 0.2 after an immense couple of days here. Obviously, we had the run up in the lead up to the FOMC meeting and afterwards, so there's been a good rally here in stocks, and obviously we're starting to turn into a risk on environment.
And there you have it, guys. So then what we had was the day after the FOMC meeting, ended up seeing a little bit of a consolidation, right? We had such a big green candle on the day. Jerome Powell did really well in his speech. We got good momentum. People were feeling good. And then we got a little bit of a consolidation, a little bit of a red day on Thursday. Nothing to be worried about. The market was just taking its time to use and digest what we're going to expect from this now changed monetary policy environment. Remember, we hadn't had an interest rate hike since 2018. This was a big change, a highly accommodative monetary policy, and investors were rightly nervous, and you saw all of that nerves priced in before the rate hike came into play, okay? So let's take a look at what happened on Friday. Now we're seeing green shoots of the market responding, and this is why we have to be very careful of not timing the market. You heard me say this plenty, and I'm going to prove it to you in this video exactly how quickly we can now start to move to the upside. Bitcoin has just formed something really important on the daily, which I'm going to share with you. We're coming up to a critical level on the Phantom chart as well. And there you can see, guys, we started seeing a big move. And Friday was a big move to the upside. We saw Bitcoin break for a key level at 41,659. Incidentally, that's what we've come back to retest now. And we know Bitcoin now needs to retest at 42.5 and ultimately work its way back up to the wedge at 44.5. So it's been a very impressive week. In essence, to summarize the week, we managed to get a critical bounce from the bottom of this wedge from a technical perspective. We're now in the middle of the wedge. We're range bound, and we need to avoid having to come back down to retest the wedge at 39. Okay, we want to see upwards momentum. If we can retest and bounce before then, either at 40 or even where we're at now, and then head to the top of the wedge, that is the ideal situation. Break to the top side of this wedge would get us to 52,800 roughly from a technical perspective. But more importantly, what is in store for this week, right? That's what we need to discuss now. What have we got in store for this week, and what's going to weigh on investors' minds? Because the reality is we've now turned into we're now in an environment where, from a stock perspective, the markets can now look to earnings. They can start looking to performance. Before, they were so worried about interest rates and inflation, what Jerome Powell's going to do. Now they can look to earnings. You've got a couple of companies producing earnings this week, such as Nike and a few others that investors will be looking at. We've also got Jerome Powell speaking on Monday at an economics conference and on Wednesday at a banking conference. I don't expect anything substantial to come from these, but as always, whenever Jerome Powell speaks, particularly in this type of environment, we have to pay attention, and that could move the market slightly intraday. Other two key factors going into this week, which is going to either help or worsen the situation here for Bitcoin. Because remember, we need to figure out, are we going to go this way, or are we going to come back down here to test this week? And the two things we're looking at is, one, the Ukraine and Russia situation, right? We know the Ukraine and Russia situation is persisting. As of now, 4 p.m. here in the UK on Sunday, Zelensky warns of World War III. These headlines are going to weigh on markets, right? If we see things like this, we continue to see headlines. That's what investors are looking at right now. It doesn't matter what we believe. Matters what the majority of investors believe. That's what's getting priced in the market. And so when this headline comes out, investors react. It's just how things work, and we need to learn how to adjust to that as well. Now, to summarize my view on what's going on with the Ukraine-Russia situation from an investment point of view, the market has started to, in my opinion, price in that this conflict could head to a potential resolution in a matter of weeks versus months or years. That's the feeling I'm getting from the sentiment that I'm gauging from doing my research and reading headlines and various other bits and pieces from investors. But the problem with that is then if anything comes out to the opposite of that, which suggests this is going to drag on a little bit more, the market's going to have to recalibrate that. And that could mean more downside risk, okay, guys? Because the prices we're seeing now, in my opinion, are relating to people thinking this issue could be resolved in a matter of weeks, right? Coming towards some sort of a ceasefire. Now, the reason markets are doing that is because both sides have now made their demands. They're having some communication. There is some dialogues. The delegations are sitting down, and there is almost a surface area of a resolution that they can come to. So that is what is helping markets to be buoyant. Now, the other thing we need to look at, which a lot of people are overlooking, is China. China's COVID cases continue to rise. We monitored this intra-week as well. But if you just look at this, we're now getting to case levels which are frighteningly similar to the February 2020 case numbers in China. Now, if this was in a different country, that's one thing, but we know that the way China deals with these things are with mass lockdowns. They do mass, hyper-strong, complete closure lockdowns, and that's going to affect output and supply chain massively, and that could weigh in on the stock market as well. So definitely something for us to look at there. We've got a PMI services and manufacturing reading on Thursday. Again, not expecting much from that. That's less the issue. But I think ultimately where we're at right now is we're moving from an environment of downside into an environment where we're in a range. The way I'd summarize this environment right now is this is not an environment too long heavy, and it's also not an environment, in my opinion, too short. Okay, so in essence, we're in a range and we need to now set our direction. We were in a position of volatility leading up to this Fed meeting. Now the market wants to decide, are we going that way or do we want to consolidate some more? And in that moment, you've got to let the market figure itself out instead of trying to time it right now. This is why I always implore you guys not to time the market. It's just important that you buy on pullbacks, get into your high conviction plays, and ride out these waves with your high conviction. Trying to time this is very dangerous. Look at where we're sat right now. Right in this middle of the wedge. I can justify just as easily that we're heading to the upside as we're heading to the downside. In fact, something could happen to head us to the upside, and then there could be a Ukraine-Russia escalation, and we head right back to the downside and break down to this wedge, right? So we need to be aware of that. We need to be alert to that. We need to make sure our positions are only in plays which we have high conviction in. Again, we're still in an environment which is very precarious. We're balancing on the edge of a cliff, and it's really important that in such moments, we're only in high conviction plays. We're not at the top of a bull market where you can have a whole bunch of meme coins and any other coins which you manage to accumulate in a bull run, which is just going to do well when everything's doing well. We're in a tough market still right now. Bitcoin, as we're speaking, you can see here on a Sunday with low volume, of course, is down 2.2%. And that is, that's going to set the tone for what's happening on Monday, because we're waiting to see what happens on Monday. But things like this do not help, right? Let's also take a quick look at the futures, because that's going to dictate which way we're heading. And we can see the Dow is showing as 1% up on the futures, 1.5% up on the S&P, and 2.3% impressively on the NASDAQ. And it's been a really good week for stocks. And remember, crypto is heavily correlated to growth stocks in particular. And NASDAQ had a really good week. I think it was up about 7.8% or something like that over the week. And, stocks posted their best week since 2020. So this is the best week of the year. It feels as though oil has topped itself at $130 a barrel. And maybe, hopefully, we can start seeing those prices come down. Growth stocks start to head to the upside. And therefore, Bitcoin and some of our favorite altcoins starting to move to the upside as well. One more thing I do want to monitor heading into this week is the Bitcoin dominance. Okay, I want to see, can we get an interesting break of this trend? Can we continue to see this start curling over now and start heading back to the 39.65% level? That's something I want to keep an eye on and see how that progresses over this week. So there you have it, guys. There is a summary of what we saw over the last week in crypto and what's for the week coming up. Make sure you watch this video. Make sure you smash up the like button and subscribe. If you appreciate this type of content, make sure you support this channel. What I'm going to do now is I'm going to link up the video to the one crypto roll. If you still haven't watched that video, guys, make sure you run over to there, watch that video, because it's all about psychology. This video is going to help you understand how important that is when trading in crypto. As always, don't forget to support NordVPN. Links in the description. Pin comment below is a link to our free public Discord server. Meet like-minded people. Tag me with any questions. Just get to be part of the community and educate yourself if you're here in crypto for the long run and you want to build sustainable wealth in crypto. Thanks for watching, guys. See you.